Today, we're going to talk about what a coffee mug can teach us about how to make smarter financial decisions.
Welcome to Wisdom and Wealth, where we talk about the human side of money. Join us as we dive beyond the numbers, unpacking the psychology of money to equip you with the tools you need to be wise in wealth.
Hi, I'm Frazier, Chief Behavioral Officer at RFG Advisory. A number of years ago, there was a study done, a famous study, where they broke people into two separate groups. And in group one, they gave them a coffee mug. Group two got no coffee mug, and what they wanted to know was how much do we value the things that we already own. And so they told group one they had two choices. You can either keep your coffee mug, hold on to it, and keep it, go on with your life, or you can go find somebody in group two to try to sell your coffee mug to. So they run this experiment countless times. What they found out was the average asking price to sell their coffee mug was about $7. On the flip side, group two, when they were asked how much they'd be willing to pay for a coffee mug, the average price was around $3. Now, mind you, it's the same coffee mug. It does the same thing, functions the same. The coffee is not going to taste any different, yet group two is only willing to pay about half of what group one was asking for. It doesn't make any sense until we realize that there's this thing called the endowment effect. The endowment effect says that we tend to ascribe a higher value to the things that we own, the things that are ours, we place a higher value on. And there's a few areas where this might show up in your life when it comes to your money. Number one, probably most apparently, is with your investments. So it's important to know, if we value the things that we own, that if we ascribe a higher value to the things that we own, that when you own an investment, you're going to tend to value it higher than what it might actually be worth. Not always, but it's a possibility. The classic case is the person who has an investment that they've held for a long time, and they're watching it drop in value and drop in value and drop in value, but they don't realize that it's losing value because they still think it's worth more than it is, just simply because they own it. Not because of the fundamentals, not because of the numbers, but because they own it. The second area where you're going to see this play out in your life is when it comes to buying a house or selling a house. If you've ever sold a house, you go in, they ask what you want to put it on the market for. You put it on the market, and when people come in with a low ball offer, you're almost offended. And it's because this is the house that you've lived in. You value it more because you've lived in it, because you own it. But what you have to remember is those people that are putting an offer on it, they don't have the same memories and the same experiences that you have living in that house. And so we tend to place a higher value on it because it's ours and we own it. Here's a third one. Imagine you're going to go buy a car. If you've been through that process before, you know that when you get there, one of the things they're going to try really hard to get you to do is test drive that car. And that's because they know the power of the endowment effect. They know that if they can get you in the car and driving the car, it creates the feeling of ownership, and you're going to be willing to pay more for that car because you feel like you own it. So anytime you're in a situation where you're offered the opportunity to test drive or trial run, the endowment effect is going to be at play. And then the fourth one is anytime you're evaluating what to do with a job or a career. You may be at the best job ever. You may never think about going anywhere. That's certainly possible. But oftentimes when you're evaluating, should I stay where I'm at today, or should I look and move to a different opportunity? Should I find another opportunity? We tend to think where we're at, the job we have, is a better job than it might actually be to an objective outside observer. So it's important to note, you can't eliminate the endowment effect. It's happening. It's going on in our minds every day when it comes to our money and our financial decisions. The best thing you can do to neutralize it is just simply be aware of it. Be aware of its presence, know that it exists, know that it's at play, and let that factor in when you're making important financial decisions. That's all we have for today. If you have any questions, please feel free to reach out to us, to your advisor. And until next time, stay wise and well.